Hello and welcome to the Running Trader. Okay, so just a short little video just to update you on a trade that I took last week, and that was on spot gold. So I don't normally trade gold, I normally just stick to Forex, but I saw an opportunity here and I've been trying out trading with Bollinger Bands, which I also don't normally trade with. So this was a first for me, trading spot gold with Bollinger Bands. So Bollinger Bands here, there are the three lines here. So we got the outer Bollinger Band at the top here and the lower Bollinger Band here. This line through the middle, this band here, that is the simple moving average 21 period. Okay, now how I decided to get into this trade was, if you look down here where the arrow is, and this was on Tuesday at 6 AM, and what's happened is I got in because this is an hourly chart, by the way, so each of these candlesticks represents an hour's trade, and so I'm going for a swing trade here. You can see that the price has gone above this 21 moving average line. Okay, so that indicates that the price is going to be moving upwards, and straight away I got in at 2,344. Okay, now my stop is down here where this blue line is, and I put the stop near the outer band, so this Bollinger Band here, because the way Bollinger Bands work is normally when the price hits either side, either the top Bollinger Band or the lower Bollinger Band, that's where it's normally finds support or resistance. So if it hit it here, it finds support there. If it hits there, it normally finds resistance. If it carries on breaking out the band, then that indicates that it's a breakout. When this channel here is quite narrow, that means there's not much volatility. As it starts to open out, that indicates there's a breakout. So going back to my stop, so this line here, and that is on 2,334, so it's 10 pips away, and it's just basically on the outer length of the on the base here of the Bollinger Band. And as you can see, it ties in here with where the price has hit before anyway. And what happened was, well, straight away actually, the next hour the price comes straight back down again, and okay, it's gone down below the moving average, but it hasn't, it's almost hit my stop, but it hasn't gone anywhere near this bottom channel here. So I hold on. Remember, I'm only risking 10 pips anyway at this point. It starts to go back up again above the 21. You can see the wicks here. It's starting to almost try to break the top of the Bollinger Band. And then we get this big drop here. But as you can see, the price doesn't finish there. The price finishes up here. It's just the wick. As you can see, it's met resistance again, so the price come back up again. Okay, and it's coming back up here. And as you can see here, it's tried to break the top Bollinger Band, but it's got the wick here and that, and it's soon come back into the channel again. It's just hugging the top rim here, and then it comes back in again, and all the way in. And this line here, this is the 21, so it's still above the 21, which means we're on a buy at the moment, and it carries on up, big break above the top Bollinger Band. Okay, now if the next candlestick had carried on upwards, then you would probably sense there was a breakout, but it didn't, because as what normally happens is, when you're using Bollinger Bands, when it just starts to go just above or just below the top or the bottom band, it will start coming back in again. And sure enough, it did. It started coming back in again, and then it goes back up again. You see that it's met resistance here with the wick, so it kind of got a big shoot back down on this candlestick here. But yet again, it hasn't hit the price hasn't hit the bottom Bollinger Band. We've got the wick here. It's met support, and it's gone back up on the next channel again. And as you can see, it's hugging the top Bollinger Band here. It's hit the wick, but it's come back down again. It's hugging the top line. Then it comes right back into the channel again. And we're still going up. Then it starts to come back down here. Now, this arrow here is because I've taken the price here because, look, it's crossed the 21. So I've decided to close my trade. And the reason I close my trade is because once it goes back below the 21 moving average, it's an indication that the price is coming back down again. And sure enough, it does. But yet again, it hits the bottom Bollinger Band and it comes back up again. Now, I could have kept it open. This is 5 o'clock in the evening, Thursday. And okay, on Friday, doesn't really do much, sort of stays about the same level here. And I wasn't gonna hold it over the weekend. I was quite happy with the trade. That was from Tuesday on, was it 6 o'clock in the morning, and went through to Thursday, 12. Okay, and I actually closed out at 2,384, so that's 40 pips, £5 a pip That's £200, and that's from Tuesday to Thursday. So yes, if I held on over the weekend, I mean, look, this is Sunday evening now, and it's still going up. But you know, you can never tell, because once it crosses the 21, it could start moving down again. And as I say, I wasn't going to hold it over the weekend. I closed my trades out before the weekend, because anything can happen over the weekend, and you know, I'm not going to leave a good trade like that. It surpassed more than what I thought it would do. I was only risking 10 pips, and I got 40 pips. That's a 4-hour return. So that's a very good return on this swing trade just for a few days trading. So I'm really happy with that. So I'll certainly be trading gold again, and at the moment I'm currently looking at trades for next week, and I'll certainly be looking at gold again. You know, when it's as easy as that, then trading does look very easy, and it can be as easy as that. So yeah, I'm very happy with that trade. So yeah, that's it for now, and I'll see you soon.